Okay, and it's on. Okay, basically what we're going to do today is basically look at the market condition and see how we can recognize what's going on the market. We're also going to be looking at the sector ETFs, which gives us an idea of what market is doing sector by sector, and what kind of stock we would be able to we should be able to look for to get our trades in. Okay, and whenever I look at the market, first and foremost, what I'm actually do, I actually look at the S&P 500. The symbol is SPX, and this is in this index. Okay, it's not actually trading security, but it's collection of 500 different securities. So it basically gives you a perfect idea what's actually happening on the market today. As you can see, for the last year, or if you look for the last 3 years, the market was going in up movement. Okay. However, I'm having right now is 1 year chart. Okay, and beginning with the February, when the last correction came through, we had a movement up, movement down, another move up, another move up, another move up, and so on, so on. What actually happened over here, that particular movement is kind of squeezes itself out, and basically what's happened is actually put itself into the rising wedge pattern, when upper line and lower line basically coming together, and the pressure inside of this start building up, with eventually breakdown out of that pattern. Usually the breakdown out of this pattern is to the downside. Okay, so the market actually is trying to go down right now. It's bouncing from the side, from each of those sides. As you can see, it started over here, it went up, you got one bounce, went down, and then you got another bounce and went down again, and another bounce, went down again, and another bounce and went down again. Usually when you have that many bounces, eventually it's going to start going down and going to break the bottom line. So I'm looking at the SPX right now, and it's in the middle of that rising wedge. Okay, we had pretty bad day today in the market for a while, and now it's actually creating a hammer over here. Okay, so that's on a daily chart. If we're gonna go on a longer term and go on a weekly chart, we basically have the very similar type of the environment when the market been up since September of 2012 and just keep going up and up and up. In order to reverse the trend, as usually we need to create a new low, a lower low, and create a lower high. We don't have either of them right now, so I still consider it to be an uptrend. Okay.
SPX.
That's on SPX. SPX is still an uptrend. And we're gonna go on the monthly chart, 5-year monthly. It's basically we have the same type of the scenario when it just keep going up and up and up. Okay. Next is the Dow Jones, and its symbol is for a Dow Jones index is DGI. And again, we have an uptrend, well-defined uptrend, and okay, and still going up on up direction. We have another wedge building up over here, and hopefully we'll see a breakdown out of this wedge to go down. okay? And what defines an uptrend is basically higher highs and higher lows. And if you look at this this particular chart, you got one high over here, got another high over here. Come on. Got another high over here. Got another high over here. Got another high over here. And this particular, which is this month's candle, is still higher than this high. Okay. So to reverse the trends, what we need to do, the price needs to start going down over here, and we need to break out the lows. And we got low here, got another low here, another low here, got another low here, got another low here, another low here. So to reverse the trend, we need to break down, we need to go and create lower low, which is a low below this low. And then that's not all. What we need to do, we need to come back up and we need to create a lower high. So we need to create another high lower than this high over here. Okay? Until we have those two conditions satisfied, the trend is up. Okay? And we look on the daily chart. I'm going to go to 1 year daily. It's basically the same type of the environment. Okay? We have a lot more lows over here. You got low here, you got another low here, you got another low here. So until we break this low and then come back up and close below this high, we have an uptrend. Make sense?
That would be uptrend.
Yes, this is still uptrend. Yes. Until we are in uptrend right now. In order to create the downtrend, you come down, close below this low over here, okay?
Previous low.
Yeah, and then come back up and close below this this high, and then start going down again. Okay?
Okay, now it's clear.
You understand?
So,
okay.
In order to identify the downtrend, it has to make all these points that what you described here.
Yeah, in order to have a downtrend, you gotta have a series of lower low and lower high. Okay.
Lower low, lower high. Okay.
Yeah, until you have a lower lows and lower highs, it's and you gotta have both. Okay, because if it creates a low and then go on a high, like let's say this would be a lower low and then goes and create a higher high. That's not the downtrend, okay? You see? Make sense?
Yeah. Now it does make sense. Yes.
Okay. So we got the S&P 500 is an uptrend, Dow Jones Industrial is an uptrend, okay? Now we're going to take a look in the NASDAQ. And NASDAQ, actually, on the NASDAQ, if you look at this NASDAQ chart, actually you will see you got a low over here, okay, and you got another low over here, which is a lower low, okay, but if you look at the highs, you got high over here, okay, you got high over here, okay, and you got another high over here, okay, so you got lower low, but you don't have a lower high, and what happened? It goes back into the uptrend. That makes sense?
Yes.
Okay. So until you have a lower lows and lower highs, the trend is up, you know. So when you have a lower lows and lower highs, that's the change of the trend.
Okay.
Okay. And now we're going to look at the small, this is a NASDAQ, and now we're going to look at the small stocks, which is a Russell 2000 index, okay? And IWM actually is
The ETF.
ETF, which actually uses, which is mirroring a small stock Russell 2000 index, okay? And here's what was so interesting about the Russell 2000, okay, and that's why I was talking when we were talking with you about IWM. I said that it will probably go a lot lower. Russell 2000 right now is in a perfect, absolutely perfect sideways trend, okay. What happened? It got it creates highs on this level over here, right around 1209, and it creates a lows at this level here at 1081 and a half, okay? So, and it bounces from each of those directions. It's basically, it's a consolidation pattern, okay, and eventually it's going to break out of it, okay, but right now it is in that consolidation pattern. So it went up from here, it bounced and went all the way down to the same exact level. Now it went up again, and right now it's actually bouncing down. And if you remember when we discussed, when I was talking to you about IWM, I said this probably will go a lot lower, okay? And since it's mirroring Russell 2000, okay, the bottom line is going to be at this level.
Oh, so it's going to make a perfect M shape?
It will go from here and it will go right here. Now, is that guaranteed? No, it sure isn't. It might come here and might turn back up and break the level, break the upper line from here, okay? However, this is a, looking at the probabilities, this is a more likely scenario, okay? It's going to come down over here, it's going to bounce from here, it's going to go back up, and it's going to break the upper line and continue up from there. Make sense?
Yes.
Okay. That's why when we look at the IWM, which is IWM actually traded instrument, Russell 2000 index root, you cannot trade it, okay? So basically, but it's very similar. We will take, let's see, price level line, and we create a line right here, and we create another line over here. Okay, so it went from here, hold on, let me change it to trend line now. Okay, it went from here, went up, bounced from that line, went down, okay, bounced from this line, went up, and right now it's on a down move, and most likely it's gonna come back down, and from there on it's gonna bounce from the bottom line, go up, and because it's gonna have the third touch on this pattern, it's probably gonna break that pattern and go up. Okay?
Okay. Okay. My question, may I ask one question?
Sure.
Is there any technique or technical analysis or any tool that would confirm 99% it would complete this pattern instead of getting a reversal in the middle?
Is there which can confirm 99% of the time?
Now, 99% of this pattern that you just showed me is going to go all the way down.
Oh,
Instead of taking a reversal from the mid of the trend or something.
okay. Well, uh,
Maybe combining two tools or three tools by using anything else.
well, there is. I have a different tools which I can use, to confirm it. But actually, there is something called Elliott wave theory. Okay, and what you are
Elliott wave.
yeah, what you're looking over here, you have a wave 4. You got wave 1, wave 2, wave 3. This is wave 4 right now. And on the wave 4, it's not necessarily go all the way down. Okay, it might turn in the middle of the way as well. Okay, but most probable scenario in this particular pattern is that it's gonna turn itself around, go all the way down, turn around, and go up. I would say probably about 70% of the time, that's exactly what it's gonna do. Okay.
Mhm. By applying the Elliott waves, right?
Yes.
Okay.
That makes sense.
Yes.
Okay. Okay. Let me fix this accidentally. Okay. Here we go. Okay. That's why you see the thing about is that on in your particular situation, if I would be me, I would set up a stop right above this candle over here.
Mm-hmm.
Okay, somewhere around 116, 117, and just keep it there. Let it come up and turn back down. So when it comes up, it creates another high, which is a lower high. Okay.
Mm-hmm.
And what I do then, I'm gonna move my stop to this high.
Mm-hmm.
That's how I trade.
Got it.
You understand?
Yes.
Okay. Sounds good. Okay, moving on. So we looked at the S&P 500, we looked at the Dow Jones Industrials, we looked at the NASDAQ, and we looked at the Russell 2000. This is the major indexes which are available on the market. Okay, those indices should tell you how the stock market doing in general. However, if you want to drill it down and you need to find out how different type of the stocks actually doing, for example, like how the oil stocks doing or how the biotech stock is doing. You don't want to have each individual stock in the sector, but you want to know how the sector is doing by itself.
Mm-hmm.
So there is a 17 different ETFs, okay, which actually tell you sector by sector what each of those sectors is doing, okay, and all of them, they start with the letter X, and I'm gonna go through those particular sectors and show you what I'm actually talking about. And the first one is XBI, and XBI is a biotech ETF. Okay, it shows you exactly what the biotech stocks are doing. Okay, and as you can see in the biotech ETFs, it is on a channel right now, and what it did, it came down to this channel, and it started the up move. Okay, so you got the move, first move of the up move is right here. Okay, you created the higher low, then went up and created a higher high. Okay, then it bounced from that high and started going down. And what's happened over here, it's actually is breaking out of the channel. The price wise, it's breaking out of this channel, and usually that's a very good indicator that it's actually going to change directions. And what it actually does over here, if you look at it, at this, if you can have a low right here. You see this low?
Yes.
Okay. And you have another low over here, okay, which is lower than this low, okay. So now we need a lower high to change a trend, okay. So if this price gonna come back up and do not break this this high over here and start going back down, we have a new trend. Make sense?
Yes.
So this is your biotech stocks, okay, biotech sector, and it covers lots of the biotechs like Amgen, for example, or some. Okay. Oh, I see that. Okay. Now let's go to the next ETF, which is XES, which is oil and gas equipment companies. Okay. This is not the actual companies which pull oil out of the ground. It's the companies which actually provide equipment and services for those companies. Okay. And it's also in a trend, in an uptrend. It was an uptrend right now. It is an uptrend right now. And again, you got the channel over here, and the price actually trying to break out of this channel. It's created lower low right below this low. Okay. Now, if it's gonna come back up and create a lower high, we got the change of the trend. Okay. But if you want to find out what the actual stocks in that particular sector, you can go on the iShare website, and it has all of the description and all of the stocks which actually belongs to that particular sector ETF. Okay?
Okay.
The next one is XHB. Okay. It's a home builders ETF. And this one doing something different, okay? It's actually, if you look at this pattern over here, the price was going up, it came a little bit down and started going back up and then started going back down again, went up, but it actually, if you look at this high and this high is lower than this high, okay? And this low is lower than this low. So this particular ETF is already on a downtrend. And it's actually confirming itself that it's going, so it's going to continue to go down. How would you trade it if you want to trade something like this? Okay. I am recording this webinar, and I will be posting it on the website, okay, on a Facebook. How do you trade something like this if you want to trade it? Okay, well, the obvious one, you want to trade it on a breakout. So you got a lower here, you got a low here, and actually broke that particular low and came back for retest. Now if it's gonna start going down again, okay, you can place your trade right around here, right below this low. Come on. Right below this low, That's somewhere around 31. And if it continue to go down, because it already has a downtrend established, so you can just put your trade right below this low and just keep going. Again, you should set up your Ruben usually set it up at 1 penny below low, and actually it's not a bad idea to set up your trades that way. I actually like doing the same thing and set up one penny or one tick below the previous low, and the difference is that he likes to set his stop at 3% from the entry point. I personally would set up my stop right here, right above this candle. Okay. Well, this is a home builders ETFs. However, you don't really have to trade the ETF. You can look which particular stocks in that ETFs and actually trade individual stocks. And one of them, for example, is the Toll Brothers. You know, come on. That's my. This is the Toll Brothers. This is basically, it's a building company, which is actually what they do. They build the buildings, okay, and it's part of the home builder ETFs. So you know that the ETF actually going down. So the sector itself is going down. So you can pick this particular stock if you want to trade, and actually you can see that this high is lower than this high, and you got the low over here, which is a lower than previous low. Okay, so you know that this is in a downtrend, and so you can set up your sell right here and short that particular stock if you want to short this stock. Okay, and we will go to the next one. And next ETF would be XLB, and XLB is materials. Okay, it's a different type of the companies which are producing the actual materials for other companies. For something like U.S. Steel probably would be a part of this because they're producing the steel which can be used in manufacturing some other products. And if you look at this particular stock, you got low over here and you got high over here. You got high over here and you got another high over here, and you got low here and you got low here. So basically it's still an uptrend, and there is if you want to trade something like this, you basically look for uptrend trades. Okay. One thing which I never do is I don't go against the trend. Okay, if the trend is up, I'm going to be trading up. If the trend is down, I'm going to be trading down. Trying to trade against the trend usually is dangerous for the health of your account, so you don't want to do that, you know, because it's the easiest thing to lose the money. It's going against the trend. Okay, you want to stay in the trend. Okay.
Okay.
And XLB, again, if you want to look at the particular stocks, you can go like, for example, X, you know, and X is a U.S. Steel corporation, and you know that the sector is up, so you want to trade this stock to the upside. Okay. Strangely enough, it's actually was in a fallen wedge, and it just broke out of it, and you can see whenever it broke out of it, it went right back for a test. Okay, and it's bouncing off that trend line right now and trying to go up.
So this presents you a different picture than the ETF?
Yeah, this is an individual stock. This individual stock, U.S. Steel Corporation, it's part of the XLB ETF, which is which is a material ETF. Okay.
Okay.
So since it's part of it, so you know that it's a part of the sector, of the market sector. So you can pick individual stocks in that particular sectors if you want to trade in that particular sector. Make sense?
Yes.
Okay. Now let's go to the next one. And next one is XLE. That's an energy sector. Okay. And the energy sector is actually is on the border right now. What it was in a nice uptrend. Okay, started here, went here, it bounced from here. It was in a nice channel, and today it's actually broke out of this channel and actually created a new low. Okay,
Those low.
yeah. If you look at this candle, it's a low at 98.64, and this candle is 98.65. So we got a new low by 1 penny. Okay, but it's still a new low. Okay, it's actually got a high over here, and you got another high over here. Okay, which is this high is lower than this high, and so you got lower high and lower low. Okay, wait a minute, it's 98.65 and this one is 98.64. Okay, we don't have a lower low just yet. Okay, yeah, this low is 98.64 and this low is 98.65. So we need one more penny to create a new low. So as soon as it creates a new low, you have a new downtrend. Make sense?
Yes.
Okay, but we don't have a downtrend just yet. It has to create a new low.
Another low candle, right?
What's that?
It needs to create another candle that closes below than this.
That's exactly right, yes. Yeah. Need to create another candle which closes below this. It means that we're going to have a new low, and since we already have a new lower high with a lower low, we will have a new downtrend. Okay? But again, this is an energy index, and if you wanna, you can trade the energy stocks, which are part of this particular. Well, it's not the index. This is actually ETF. Okay.
That's ETF, yes.
Yeah. So the next ETF is XLF, which is a financial ETF, and this one is very, very important one. Okay, financial stocks actually move the market more than any other stocks out there. Okay, it's banks, it's financial institutions, which part of this ETF. Okay, they are in rise and wedge, and you got 4 touches at the top and you got 3 touches at the bottom, and it tried to go down today and it's bounced today and came back up a little bit. Okay, we have a low over here and we got another low over here and we got a lower low, but we need lower high to create a new trend. And personally, I would look at this ETF before I'm gonna trade anything else. Before I start trading it, I needed to break out of this wedge, And
this lower line, that the support line you made it,
Yes.
right? This,
Yeah.
if the candle closed below, then we would be trying to short this one. Otherwise, no need.
Yeah, I wouldn't touch it until it actually gets out of this and actually close below it, you know. But right now it's still in the uptrend, and until it gets out of this wedge and create a new low over here, that's when it's gonna create a new downtrend. Okay. XLF financial sector is very, very important for a market. Okay, this particular sector probably move market more than any other sector. Another thing which I noticed about the sector, if you look at this, actually volume was going down. Okay, so as the price went up, the volume actually went down. So right now it's to the point that lots of the traders are basically not actually trading this particular sector, but actually sitting and just watching it and waiting for it to break out. So more than likely, whenever the price breaks out of this ETF, again, all what they're doing is loading a spring right now. It's just like winding up a mechanical clock. You just put this winding the spring, that clock up, you wind in the spring, and when you let it go, it's probably going to explode out of it. Okay? You see that this is my volume over here. Those looks like a little tree sticks, the blue sticks at the bottom over here.
So the volume is going down on this one.
Yes, the volume is going down. It's been as high as
This high,
this
20.
high, and it's this high, and this high, and this high. So it is actually going down. Okay, and eventually it's the winding the spring. You can wind the spring only for so long. Eventually, it have to explode. Okay, it's a similar thing happened here. Okay, as you can see, the volume was going down, 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 and when it exploded, it exploded. Okay.
I have one question, if you don't mind.
Sure.
If you see like 418 around that area, the volume is high, okay, and you see we are falling down over there.
Mm-hmm.
And once you see over here in June 20th,
Mm-hmm.
you see the volume is much lower than April 18, but we are trading higher. Is there any logic behind it, or the volume they're taking out or going in, or the same thing, or should different styles?
Absolutely. Actually, you can see on most uptrends, you have a higher volume on the downtrends than you would have on the uptrends. Okay. You see, like for example, right here, you see the volume is high, the volume is high, the volume is high, the volume is really, really high. Reason why it happens like this, that lots of traders are actually buying on a down move, okay, and lots of traders who had the stock gonna be selling on a down move, okay. Usually people, whenever this down move happens, the people who own the stock wanna sell the stock, and the people who don't own the stock look at this, oh, this price actually looks pretty good to me, I'm gonna buy it. Okay, so they actually buying the stock over here. It kind of doesn't make much sense, but that's usually the way it works. This is where your volatility increases together with your volume, okay? And when it's actually bounces and start going up, the volume start going down, because basically the people basically sitting with this. The people who don't own it, they said, well, it's going up, it's too late to buy, so I'm not going to buy it right now, I'll wait until it starts going back down. And the people who own it, they're basically waiting and looking for it to go up so they can make money. Okay, so the volume going down on a up move, okay, Then you got a down move, and you got value increases. Then value decreases on the up move, and the value increases on the down move. And here is a long up move, and you can see where the volume is. You know, really
Yes.
low. Okay, this is what they call psychology of the traders. Lots of times the traders, that's exactly what they're gonna do. Okay, when the stock going down, if they own the stock, they're gonna sell the stock to lock up their profit. Or if they don't own the stock, they're actually gonna buy the stock to expect to buy low and go high. Okay. But when the stock goes high, they just either gonna hold on to it if they have it, or they're gonna wait until it starts going down to buy it if they don't own it. Make sense?
Okay. Yes.
Okay.
So there is no like technique to know, like, for example, does it show red and green bars on the volume if the people are jumping in or jumping out?
Is there? I'm sorry, I didn't follow you. What again
Okay.
the question is?
You see the bars of the volume,
Uh huh.
right?
Yeah.
Is there a two kinds of bar? Is red and white, red and green. The green bar shows number of people are jumping in, and the red bar shows.
No, that's not particularly the case. Okay. It's basically they read the green to correlate with the candle which you have over here. Okay, so if you have a red candle, you're probably going to have a red bar as well. Okay, in your particular situation. However, if you want to know how many people buying and how many people selling, you can find out. Uh, I'm not going to go into this right now. There is a way to find out how many people buying, how many people selling. And there is something called open interest, which actually gives you a number, which actually shows you how many people wants to buy, how many people wants to sell. You know. But I'm not going to go into that right now. It's a little bit more advanced for you guys, and it's a little bit. I'm not going to do it right now.
Okay, let's proceed then.
Okay. Well, let's go to the next ETF. The next ETF is XLI. Okay. That's the industrial sectors. Basically, when we're talking about Dow Jones Industrials, it's referring to the industrial sector. Okay. Well, it's Dow Jones is actually a little bit more than that, but this is the industry, the whole industry, which manufacturing industry and so on and so on. Okay. And basically what we are looking on this one, had a nice uptrend, and we actually have a breakout on this one, which happened a few days ago. Put this line over here, extend it to the right. Okay. You can see that it actually was going up and down in both directions, and then it started going sideways, and we got a breakdown right here, and it's actually in a wedge, in its own wedge right now. So the question is, if it breaks, the fallen wedge usually breaks out to the top and goes back up. Okay, if that particular happens, we basically have a flag, which we can measure this flag from here to here. Okay, and let's see, it starts at 48.39, it ends at 55.89, so we got about $7, $7.50 over here from the breakout. So if this is a flag, okay, and in order for it to be a flag, it have to actually start going up and break that upper line, okay, and we have to wait until it actually breaks this 55.82 level. When it breaks at 55.82 level, we got the breakout of the flag, okay. So what we to know where it's actually gonna go, we said $7.50. So we're gonna add $7.50 to 55.82. So it should go to about 63.50. 63.30. So basically it's now $750 to the top line, and that's where it's supposed to go, if that's a flag. However, from here, there is very good possibility that it's not going to break to the top. It's actually going to keep going down. Then it's not a flag, then we have something different in here. We just have a downtrend. And this is industrial sector, and what you can put it in your watch list, and basically watch it and see what it actually will do. Okay, if it breaks up, then wait for a break up at 55.82, and then see where it will go. Okay. The next sectors is XLK.
Hello.
Hello. And XLK is a technology sector. Okay, it's in a pretty defined uptrend. Okay, it's also in a wedge, and it's still got more room to go to the upside, and then there is no lower low. The low over here is higher than this low. So it is in an uptrend, the technology sector. So if you want to trade something to the upside, you can actually look at the technology stocks. Okay. And the next sector is XLP. Okay. XLP is a consumer staples sectors. Okay. And what are the consumer staples companies? Is basically the companies which producing the stuff which we cannot live without. Okay, it's companies like General Mill, is who's producing the food, and this is something which the consumer gonna be buying no matter which way the market moving. They're still gonna be buying. That's why they call this sector as a defensive sector, because as a movement. There is very little possibility that it's actually gonna drop like a rock, like momentum stocks. It's a slow moving sector, but it is more reliable sector. Okay. And next one is XLU, is a utilities. Okay, it's like your electric company, local electric company, local telephone companies. That's all utilities. Okay. And utilities been in a uptrend, and it's been in a channel, and it's still in the channel, and it's actually today it went up. It's one of the few sectors which actually had the upper move today. Okay. The next sector is XLV. XLV is a healthcare sector. Okay, and it's a well-defined uptrend. So all of those hospital stocks, that would be a great place for you to put your money in right now. And it's going in uptrend right now. And XLY. XLY is the consumer discretionary sector. Okay, it's like it's a stuff which a consumer doesn't have to buy. Okay, but buys anyway. Like for example, stuff like Abercrombie Fitch, part of this sector, you know. That would be one of the companies which would be in this sector. And over here, we actually, what we have, it's a triangle, and a couple days ago we had we had a breakout of this triangle, or on we had a breakout on July 1st. Again, it went up, created new high, went down, and actually for a test, and it bounced from it. And today it has actually followed the market, and it started lower and actually bouncing off this line as well. Okay, so we have a definite breakout over here. However, if you want to trade this properly, what we need to do, we need to wait for it to start going up, create a new high to break this one up, and then you got 68.13, so we would be buying at 68.14, and I would create the stop right underneath this one over here. Okay, and let's see, next sector, XME. It's a metals and mining sector, so all of your gold mining stocks would be in this particular sector. Okay, and in this particular one right now we have a sideways channel. Okay, and again the price is bouncing from this channel up and down. Okay, so most likely scenario in this particular one, it's keep going down until it bounces from it. But we got, let me see, we got 1, 2, 3, 4. Okay, this is a 5. Okay, so we got 5 waves already, so it's more likely just pull back just enough for you for it to create a little bit room and start going back up from here. Okay, now the next one is...
No, I have a question on this one if you don't mind.
Sure, no problem.
You're just counting the 5 waves, right, for Elliott waves.
Mm-hmm.
And thereafter there's always a 3 correctional waves that shows you the downtrend.
Mm-hmm.
So you think it's gonna go down now?
Well, usually I already counted 5 waves on this particular channel. Okay, so you might have a correction of 3 waves, but you also may have a correction of 5 waves as well. It's not a requirement to be only 3 waves. It could be a 5 waves as well. So we got wave 1, 2, 3, 4, and 5. Okay. So from here on, it's probably going to do is going to give you a continuation of the previous trend. Okay. So what's the continuation of the previous trend? The trend was up. So it's probably going to give you upper movement from now on. Okay. But what it does, it bounces from this line and going to come down a little bit and then start going back up. And break that that upper line of this channel. Is that guaranteed to go this way? No, absolutely not. But it's a more probable scenario than go all the way down and break the bottom line of this channel. Make sense?
Yes, yes. Thank you.
Okay. That's what I want to hear. Okay, let's go to the next ETF. Okay, the next ETF is XOP. and it's oil and gas exploration companies. Okay, what the oil and gas exploration companies? This is the companies like, for example, rig, which is a Transocean. Okay, that's one of the companies, or APC, which is Anadarko Petroleum Corporation, which actually specializes on actually pulling, actually drilling. It's the companies which actually drill for oil, okay, or gas, or something like that. So they explore. They're basically trying to find where the oil is, okay. And again, we got the rising wedge, and it's bouncing inside this wedge, and today it's actually trying to break out of it. Now we gotta see where it closes. If it breakouts is always not just a poking out, but it's actually have to close below the line. Okay, if it closes below the line, we can say that it's actual breakout. If it doesn't close below the line, it ain't breakout yet. Okay. And next one is XPH. XPH is a pharmaceutical companies. Okay, it's companies like Abbott Laboratories, Merck, the ones who actually make drugs. Okay, it's well-defined uptrend on this one. You got low here, you got low here, you got another low here, you got another low here, so it's well-defined uptrend on this particular ETF, and it's still staying in the channel. Okay, and until it breaks out of the channel, we actually have an uptrend. Okay, and the next one is XRT. Easy. Okay, XRT is retail ETF. Okay, and this ETF actually was in triangle. As you can see, that this triangle was going down here, and the bottom line was going up, and it broke out of this triangle right here, which is 617 on June 17. It broke out of this triangle. It went up, came back for a test, bounced and went up, but it never broke out the upper line of this triangle of this triangle. So even so, it broke the triangle, and most likely it's going to go up and break that line. It's still in it, So you gotta be careful with this. Okay, it's pretty interesting chart, but I would not actually buy into that particular chart until it actually breaks at 88.95 level. Okay, and the next one is XSD. That's the last one. Okay, and XSD is a semiconductor ETF. Okay, and the companies which actually make the computer chips and other type of it's semiconductor companies. Right now, what it is, it's a well-defined uptrend. You got a high here, you got another high here, you got a high here. So creating higher highs and higher lows. Okay, and it's actually I love this particular chart because you usually can know exactly what's going to happen. As you can see, this movement right here. Hold on. This movement right here is pretty close to be the same as this movement over here. Okay, And so you pretty much know exactly where it's gonna go, okay, whenever it breaks out. Okay, this is all of the ETFs which creates market sectors, and believe it or not, but I'm actually look at all of those ETFs every day to actually figure out where the market is moving and what's actually happening on the market. And lots of time when you can see that actually rebalancing happening on the market, when it's actually uh, sellers in one sector and you have buyers in another sector, one ETF standing still or going down and another ETF's going up, so you know where the people are moving and where they're moving their money from. So it gives you an opportunity to basically to see if you want to come in and come in long or short on that particular ETF or anything else. Okay, there's only a couple others which I actually look at. One of them is TLT, which is 20-year treasury bonds. Okay, gives me an idea where the interest rates are, and it's actually is opposite to actual interest rates. So if the price is higher, interest rates are lower. Okay, and vice versa. When the prices goes down, the interest rates are rise. Okay, and you know about the GLD, it's basically gold ETF, and SLV would be a silver ETF. You know, if there is a ton of the different ETFs over there which you can actually look at. Well, that's about all what I want to talk about today. And Amir, you have any questions for me? Because
I asked if we're gonna do the Fibonacci and Elliott wave on anything today, or do you want to have
uh,
a separate webinar on this one?
well, we're going to have a separate webinar on that particular one. I don't really want to go into that Fibonacci and Elliott waves right now. I can show you a couple examples, but
Please, that would be great, brother.
okay, you gotta understand what the Fibonacci is. Fibonacci is not the magic tool. It's not. Okay, what it's actually it's measuring tape. Okay, it basically measures the distance between the certain places. Okay, like for example, if you want to go from New York to Florida, from New York to Miami. Okay, how do you know how much money do you need for gas? Okay, what you're gonna do, you're gonna take a map and you're gonna measure the distance on the map from New York to Florida, then you're gonna multiply it by whatever uh, whatever the scale on the map is. Okay, that gives you the distance, and then you figure out what your car uh, gas mileage is, and you figure out how much money you need. Okay. Same thing with the Fibonacci. What the Fibonacci is simply a measuring tape. Okay. It basically measures the distance from one to another. Okay. Like for example, if you're gonna go from this high to this low, it's a measuring tape. Now let me put the Fibonacci over here. And we're gonna go from this high to this low. And it gives us all of the different levels. It's just a distance from one place to another. Okay, you got it started over here, it went down, went to the 38%, and went up to the 61%, and went down, and so on, and so on. Where the Fibonacci came from, it was discovered by the Italian mathematician who just observed in general that which everything in this world goes by the certain percentages, like 38%, 50%, and 68%. Okay? If you take a tree, for example, when a tree grows from the ground and you take the stock of the tree, you will find out that the lower branches of the tree are going to be somewhere around 32% of the length of the tree. And you have a majority of the tree at the 50%, and then at the 62 start going less and less, okay, until you go all the way to the top. Lots of time, if you look at like a Grand Canyon, you find out there's different levels of the different levels of the ground. It comes at the same 32, 50, and 68%. What it is, basically, that's what Fibonacci extensions are. And somebody figured out that you can use the same rules applying to the trading, so we can actually use a Fibonacci in the trading. So when they start going up or going down, it's gonna go up and gonna reach that 32%, and then it is gonna go bounce from that down, or will continue up. If it continues up, what's the next level? 50%. What's gonna happen over there? Is it gonna bounce down or gonna continue up? If it's gonna continue up, where it goes? 62%, 68%. 62%. Okay. That's exactly what the Fibonacci is, and that's exactly how they work. And what you do, you just measure the distance between the top and the bottom. Okay. And as you can see over here, when it was going down over here, it went to the 50% and basically paused at the 50% level, and actually went down a little bit farther and went to the 38% level. Okay, then start bouncing back up and went to the 61% level, but from 61% level it started going bouncing and going back down. Okay, same thing over here. When it goes up, it went to the 50% level, and it said that's enough, and it's bounced back down. So basically what you see over here, you see hidden support and resistance levels at those different percentages. Okay, because the 50% is actually a resistance level right here. Okay, it tried to poke it through, but it didn't have enough, and it started going back down. Went down to the 100%, and it started going back up. It went to the 38%, and paused over here, and poked and poked and poked, and finally today it's actually broke out of it. Okay? That's how you use the Fibonacci. But it's, again, it's a measuring tape. It's not a magic tool. Okay? It gives you an idea where those levels are, but it doesn't mean that it's going to go to those levels and do what you want it to do. Make sense?
Yes. Okay. It's just a measuring tape, or you could say where the 50% would be, and the next move would be stopped by a 61.8, or it's going to fall back from 50.
Exactly. You don't know what it's going to have, but you do that you do know that something might happen over there. You don't know if it will happen or won't happen, but you know that something might happen over here. And it's like, for example, on this move over here, it started here, it went up, it gapped, okay, went up, and it went to the it went up from here. And what you can do in this particular situation, you know, what I would do, you know, if I would be trading something like that, I know it can go to the 38%. I know it broke through the 38%. So what I'm going to do, I'm going to put my stop right below the 38%. Okay, wait until it got to the 50% level. Okay, now if it would break break up from here and continue going up, I'm going to move my stop right under this level. And when break this level, I would move my stop right under this level. Make sense?
Yes.
Okay. So don't think about the Fibonacci as something magical,
Something magical.
Yeah, it's not magic. It's a measuring tape. That's all it is. And you got to treat it like a measuring tape. Any more questions?
Not from my side.
I'm not going to do Elliott Wave theory today at all. I'm sorry, but this is something I'm not prepared to do it today. It's a lot more complicated and we're going to do it a lot later. Elliott Wave theory is not something I'm prepared to do it today.
All right.
Okay?
All right, sir.
Thank you very much, and I will be finishing the session right now. If you have any more questions, feel free to reach me on the Facebook. Okay, I would be more than happy then for you. Thank you,
sir.
guys.
Have a great day.
Thank you too.